Hi there. Thanks for tuning in. Today we're going to be doing an analysis of Tecnoglass Inc. They're essentially a company that is a leading architectural glass manufacturer. Essentially, they provide architectural glass for single-family residential and multifamily commercial buildings. And you can see that they mainly operate within the US market and a little bit in Latin America. They're a company that was founded in Colombia. Now their headquarters have moved to Miami. They have about 9,000 employees. They have about 20% of revenue compounded annual growth rate, and their EBITDA has grown about 30%. They have $850 million as of quarter 3, 2023 in revenue, and they have a backlog of about $836 million, which is a huge number. And if you see here, the mix is mostly single-family residential, and then multifamily and commercial properties are 58% of the rest of their revenue, okay? So here we see that they're, in the grand scheme of things, kind of a young company in the stock market. They became public in 2013, and since then, they've just been entering new markets. They've been grabbing new agreements, making new investments, and recently they also have started expanding their geographies a little bit. So, for example, they mostly focus in the US South, but they're penetrating within new markets in the US South. And recently they've entered into the vinyl windows market. They've reached an installed capacity of approximately $1 billion. And they recently even started buying back shares. So that's interesting to see. And as we see here, the revenue compounded annual growth rate since 2013 all the way to 2023 has been about 16.5%. That's a monster number. And with EBITDA, it's been 23.4%. So huge double digits numbers. Pretty great to see so far. They also, as we said, entered into the vinyl windows market, which doubles their total addressable market. Of course, they still need to figure out a lot of things, grab a contract, so this is just potential. But it's cool that they're addressing a new market, that they have the room to grow there, right? And it seems like they have a new sales representative focusing on North Florida, Alabama, South Carolina, North Carolina, and Georgia. So they mostly operate in the US South, although you can find Tecnoglass's things in Texas, in Colombia, in Panama, in Florida, etc., right? They also have insane profitability here. You see that the gross margin has been improving all the way from 31.5% back in 2019 to now, as of quarter 3, 2023, of 49.2%. That is amazing gross margin, right? Especially when you're someone who has to manufacture the glass yourself. And their adjusted EBITDA margin seems to be improving as well from 21.4% to 38.8% now as of quarter 3, 2023. So that is insane, right? And they give a few reasons here, right? Where some automation initiatives have clearly benefited them. This is what happens when you automate a lot of things. Diversification to the single family residential end market has driven benefits to margins, right? And operating leverage and higher revenues have more than offset depreciation, labor, and other indirect manufacturing costs. So they give the reasons as to why, but still, we love to see margins because those make a difference at the end of the day. Those make a huge difference. They also have really great free cash flow, right? So this is the cash flow from operations, this number up top. Then they have the CapEx, and then you have free cash flow, which is essentially what's left, right? So the free cash flow has been growing, right? Their cash from operations has been growing, period. Their CapEx, they have high reinvestment into the company, right? They're a quickly growing company. They want to reinvest or make more factories, more tools, more machines, especially with the automation initiatives. So this is not surprising. However, it's good to see that overall their cash flow picture is growing, right? So this is very important to see. And you can see the breakdown, for example, of how they end up getting cash from operations here. So it's great so far. Now that we're talking about free cash flow, I want to estimate how much free cash flow they're going to generate in the future. That way we can get the value of the stock. Now, I'm going to go to Yahoo Finance. You go to the analysis tab, and here you can see predictions for what analysts think the revenue is going to be in the current year, 2023, and the next year, 2024. Now, if you'll see in 2023, the analyst estimates range anywhere from $837 million to $842 million. So it's a pretty tight range. Analysts are usually pretty good at predicting revenue, so which is way better to use than earnings per share, because earnings per share can be manipulated with share buybacks or by issuing more shares, while revenue is a little harder to trick, right? So I'm going to grab this low estimate, right? I'm going to be a little conservative here because I'd rather grab the lower numbers. And if I'm comfortable buying a stock with lower numbers, then if they do get higher numbers, I'll reap way more benefits in the long term, right? So I'm going to grab this. I'm also going to note that historically, they seem to have a free cash flow margin of about 10%. That means 10% of revenue ends up as free cash flow. Okay, so I'm going to just roll with that number for my calculation. Now, I'm going to say that this 836 million is going to be their cash flow for 2023, for 2024, the other number, this 916 million, and that I'm going to grow it by 3% for 2025, 2026, and in perpetuity. Okay, so that's what I'm going to do for a free cash flow growth prediction. I'm going to have a required rate of return of 11%. That is to say, I want 1% more per year than the average market gives me, right? If the market return is 10%, I want 1% more per year, which compounds to be a whole lot, right? I'm going to divide that by the number of shares out, and then I'm going to get a fair value of equity of $23.36. However, if we subtract the net debt that they have, then the fair value is actually going to be $22.31. So at the end of the day, the fair value with 11% rate of return and a 3% perpetual growth rate is going to be $22.31 with net debt included. Now, let's look at where Tecnoglass is right now. Interesting. So in the last 5 years, they went from trading from below $10 really to crashing to almost nothing after the global pandemic, to going all the way up now as of December 25th to $45.11. That is monster growth in the share price, right? And you see this grew exponentially here in 2021 and then again really in 2023. So Tecnoglass is a company that has done great. If you were a shareholder 5 years ago, I bet you're very, very happy with your investment. The market cap now is about $2.15 billion. The PE ratio is about 10, and the dividend yield is 0.8%, but it does grow every year. So I want to show you a different chart now. This chart is the chart of US housing starts, essentially how many new houses are being built in the US, right? And I want to just show you some parallels here. So, it crashed in 2020 for obvious reasons, just like this Tecnoglass price crashed. Then it recovered here, just like this recovered here. And then you can also see, for example, this recent dip and growth in 2023, which slightly parallels this dip and growth in 2023, right? So to me, it's very interesting that Tecnoglass is reacting this way because it shows that it is correlated with the construction markets at the end of the day. So that is something very important to note, because at the end of the day, if construction is weak, the revenues of Tecnoglass are going to slow down at the very least, right? Or the growth is going to slow down. So this is a stock that when construction is strong, when the economy is strong, everybody's going to love. Clearly right now, people are loving it, right? People have been loving it since basically 2021. But if construction slows down, these kinds of things can happen, right? So it's very important to see that it's intricately connected. It also is basically double the price, right? I said $22.31. It's at $45.11. So it's a little more than doubling the price that I got as the fair value. So it seems to be overvalued to me. And a reason why is simply that if this slows down, you could see the stock price crash by 50%, right? I wouldn't be surprised if construction slows down, if housing starts to slow down, all of a sudden Tecnoglass has less glass to sell to people, right? And it falls down again to this 20 level, right? So at least in my personal perspective, it would be interesting to wait and see if this slows down, because these kinds of stocks are important to buy when everyone hates them. If everybody hates it and you're at the bottom of the cycle and then construction recovers, that's when this stock is going to do this again, okay? So what's going on at the end of the day? What's the deal? Tecnoglass is fundamentally an insanely strong company with growing margins and strong free cash flow. A growing dividend as well as growing revenues and free cash flow support returns to shareholders and very sustainable reinvestment. However, Tecnoglass is tied to the construction market, especially in Florida and in the US South. So if this slows down, Tecnoglass's growth will certainly slow down. Growth in Tecnoglass has been larger than that of the construction market, leading to possible overvaluation. And while the company is strong, the stock price will be very vulnerable in bad years, right? When the stock price is so elevated, it can crash by 50% in a year where construction just slows down a lot, right? That P ratio of 10 looks good, but if construction slows down, if their revenue slows down, that's going to shoot up all the way to 30, right? Or to even more than that. So I have to ask you, what drives growth, right? And not just, Clearly they are growing because they're signing new clients, but we're talking the fundamental things behind it, which is construction, right? Construction drives growth for Tecnoglass, right? And if that's the case, then we have to look at the construction market as well. We have to look at the trends in US construction. We have to see if there's a slowdown coming, because it's going to be better to buy once it's slowed down and once the share price has crashed than when everybody loves it. If you're an investor in Tecnoglass, not only do you have to understand Tecnoglass as a company, but you have to understand the construction trends in the USA mainly. So this is very important, and this is part of the research that you have to do deeply if you're interested in Tecnoglass as a company. Now, with that said, I thank you so much for watching. If you like this video, don't forget to like and subscribe. I'm going to post more videos like this, and if you have any suggestion of any company you want me to look at, comment down below and I'll take a look at it. Once again, thank you so much for watching, and I hope you have a great rest of your day.